Welcome to the second live session at Financial Inclusion Week 2024. I'm Jayshree Venkatesan, and I lead consumer protection and our strategic industry engagement at the Center for Financial Inclusion. And today it's an honor to welcome our panelists, Nanjira Sambuli. Nanjira is a fellow in the Technology and International Affairs program at the Carnegie Endowment for International Peace and a Ford Global Fellow. Welcome. Deepti George, who's Deputy ED and Head of Strategy at Dwara Research. Welcome, Deepti. Soni Kelly, who's the Global VP Research and Advocacy at Women's World Banking, also a former actionista, and I learned quite recently that she was one of the founding members and architects of Financial Inclusion Week. So welcome, Sonia. And last but not the least, David Porteous, founder and CEO of Integral Governance Solutions. Thank you all for joining this panel on this frontier topic, which is digital public infrastructure, user centricity, and the importance of listening to the most vulnerable voices when designing infrastructure. If there is one term that didn't exist a decade ago, but is now part of our lives in inclusive finance, it's digital public infrastructure, or DPI. And in the previous panel, we heard about PIX in Brazil in reference to the fast payments layer of DPI. And really it refers to the set of interoperable elements that creates the underlying rails for delivering digital financial services as well as several other services. But what constitutes DPI is, we were discussing this backstage. It's part of an evolving definitional space and definitely is not the topic of today's discussion. For the purpose of inclusive finance, we generally refer to the combination of digital payments, ID, and data exchange as the three interoperable layers that serve as the rails to deliver digital financial services. But with that, David, I want to turn to you and ask you to describe the theory of change that connects user centricity to infrastructure, which tends to be abstract and many layers removed from the end users. And really, who is the user when we think about infrastructure? Given that there are over 100 countries that are implementing some form of DPI in the hope of achieving inclusion gains, this is rather a crucial conversation to have. So, David.
Yes, thank you, Jayshree, and thank you for the opportunity to be part of this panel, especially with panelists here who really are at the front lines of thinking about some of these important questions. So I'm looking forward to hearing more. But you're right, the discussion ends up being abstract very quickly. And I think that's partly because we can distinguish between this DPI approach, this kind of mindset towards digital transformation that has all these elements like interoperability and openness and so on. But it is an approach. And as an approach, it's quite hard to map that directly to change, at least in the short to medium term. It would be like saying in financial inclusion, the savings approach is the most important thing for financial inclusion. And we all know that there are many moving parts in asserting a claim like that. And it's not something that you could easily make after a relatively short period of time, which is the period of time that we've observed DPIs with any degree of rigor. So I think it is more useful to think about the DPIs as capabilities, as some of those digital systems that you've mentioned, where there is some gathering evidence about what are the kind of channels through which we see benefit. So I would think of three, Jayshree in particular, that are worth mentioning in this conversation with a linkage to financial inclusion, which is really where some of the most compelling use cases have originated. So the first one would be cost reduction, which is that DPI as infrastructure can reduce costs in ways that can open access and increase affordability for end users. And so the best examples we see of that come out of, in my mind, India, where we see how the use of eKYC, the link to the Aadhaar digital identity system, has reduced the costs of KYC for account opening, something like $12 to 6 cents, according to one study. So that's a massive reduction. And anyone who's familiar with product costing, especially for low-value accounts, would know what a difference that makes to a business case and therefore the willingness to take on low-value customer accounts. So there's one channel of DPI impact where we have seen infrastructure make a difference. Here's another. I think there is evidence of making a difference through competition and innovation. And to be clear on that, DPIs themselves are seldom innovative themselves. They often replicate one another. It's one of the risks, is you get something wrong in one of the the kind of test case ones, and it replicates through the system as people are copying them in different places. But what they do is they enable, or they should do, is enable innovation higher up the stack at the application level. And so there we do see evidence, and I would think you've just mentioned PIX. I think Brazil is a good example of where PIX as an open payment system has enabled new entrants in the Brazilian digital banking space to come to the table and to be competitive and to give existing incumbents a run for their money. And indeed, some of them have been very important to the success of PIX. So it's a two-way street here. The infrastructure has enabled that, and these new contenders have in turn driven the use of the infrastructure. So there's a second channel. And I think there's at least a third, that there is some evidence, although it's more nascent than the others. And that's this use of information in a structured way to better manage risk, which obviously plays out in insurance and credit. And here in financial inclusion, we think about open finance in particular, although we need to be careful because not all open finance schemes are in fact DPI schemes. They don't necessarily have an operator or a scheme behind them. But in the fastest growing schemes that I know of, which you see today in the UK, in Brazil, in India, we're starting to see them take off with account aggregators. There we do see a scheme which has protocols, it has standards, it has an operator responsible for it. So it's a DPI. And we do see early evidence of how bringing more structured information to the table in a safe and authorized way can start to make a difference on access to credit for small businesses. That's the UK example so far, and potentially also for credit-deprived consumers as well. So, Jeshri, I think we can safely say we do see mounting evidence of those channels leading to benefits for end users. I would just say, though, that as we think about DPI, we need to be carefully aware of the risks. So we aren't just looking for the positives, we're aware of what's happening on the side. And for me, those risks are the risks of abuse, that DPIs can be used for unintended purposes, or perhaps even worse, for intended purposes, but purposes which are not developmentally positive in any way. And then the other side of that risk, the risk of no use, which is that all this time and energy and effort goes into putting something together which just isn't used by people because it's not trusted. And so avoiding abuse and no use is really important, but hard to do in order to deliver those sort of end user benefits, which there's evidence of, but getting to them in all places remains a journey, which I think most countries are at a relatively early stage of seeing.
No, that was a great summary. Thank you, David. And I love the way you summarize the risks of abuse and no use as the two ends of the spectrum. I will come back to you on the cost reduction aspect, because I think that for sure there have been some efficiency gains, but there's also a big question on subsidies that have been driven and how that impacts long-term sustainability. And in our case, would have an impact on, the budgets that are available for ongoing testing and user centricity. But just turning from you to Deepti, because you mentioned, some of these risks, and we see some of that coming through, Deepti, in your excellent research and mapping of the grievance redressal journey in the UPI app with customers in remote rural India. I'm just going to read a quote from your work because it helps illustrate the importance of keeping some of the most vulnerable users in mind. So here's what one of your respondents said, which is a woman in Anand district in Gujarat. So quote, "I saw the contact page, which is the chatbot interface, but I didn't understand how to move forward from this screen. And then I thought I would visit the bank branch for complaints." This was in the context of using the UPI app, which for those who are joining and are not familiar with, is the instant payments app in India. And in the previous panel, Deepti, we heard a lot about the importance of trust, how it's so easily broken, particularly for first-time users. Would you mind sharing some of the top insights from your research? Because it really does indicate the points in the consumer journey where trust can be broken. And what lessons should we all draw from that?
Thank you. Thanks, Jayashree, and thanks, CFI, for the interest in the work that we have sort of just completed. I just wanted to maybe begin by saying that UPI is, of course, digital payments. We are talking of about 15 billion transactions that are happening on a monthly basis in the country, and really new to digital payments users just getting onto, and so those network effects are really becoming very obvious today. And so the I think the big question would be where the next 300 million users going to come from. And I think that's where the work that we did, I feel, is very, very important. So just to kind of and I'm sure a lot of people who aren't familiar with what's being done, but we really wanted to understand when people have issues with a transaction that they have executed or haven't been able to execute, or when when they were expecting to receive money and they didn't, what did they do about it, right? And so these are just transaction related issues. It doesn't go into the plethora of other issues that consumers may be experiencing, because of the fact that UPI is such a sophisticated system with many features which are really thought of and introduced into the ecosystem, keeping in mind the various customer segments and their needs. So there's a lot of thought that's gone into the design of various features. But then the question is, when you have a very simple transaction related issue, what do you do about it? And we found and so for that we really went to the field. To constrained users. These are individuals who are low income, but also with low to medium sort of digital proficiency. And then we had to find out what did they do when they had an issue. And from all of the insights that we kind of received there, we actually ended up sort of redesigning what could prototypes look like. So we kind of redesigned what the in-app help support mechanism could look like, and then we took that back to the field to test it further. And all of those insights have been put out as public goods that are made available, and that's accessible to not just product tech stakeholders, but also UX researchers, sort of the design stakeholders out there, but also the operator of the DPI here, which is the National Payments Council of India, as well as entities such as the regulators. We're talking of the Reserve Bank of India. So just to kind of get back to maybe the insights, I think the first question is, was there even a challenge, right? What is the data showing? Data, in fact, indicates that the sort of, I would say, debit reversals and the success rates of debit reversals have been improving exponentially. So it's not that people are losing money at all, but rather that when people's money gets stuck, they wouldn't know what to do about it, which means their typical mechanism. And the important point is, we did assess from a social media sort of analysis, and what we found using a subtech tool is that really your inadequate address as well as transaction failures seem to co-occur quite frequently. And so those are the kinds of issues that people actually complain. And these are not low income or constrained users per se who really go to social media. But what we in fact found from the constrained user perspective was really that most users in fact sought resolution outside of the UPI app. They experienced situational vulnerability, right, towards potential loss or fraud because of the lack of comprehension. They wouldn't know whether clicking on a specific point in the app flow might lead them to lose more money, or perhaps there's money that is stuck which I may end up losing if I click on something, right? So there was significant confusion with complex processes and the entire experience. And this led to a lot of anxiety when it comes to actual usage and sort of sustaining that journey of going through the journey of finding resolution till the end. So and so all of this resulted in a trust deficit, right, with the platform because of ineffective resolution. And then this led to dropouts from UPI payments, irrespective of how good your bank was or your third-party app provider was. Now, this doesn't mean that people will stop using UPI, right? The point is that network effects have already kicked in. But the bottom line is that this anxiety around it really doesn't help, because people, in fact, literally turn to YouTube or, and at least that's what we saw in India, and friends and family who are more well-versed, going to the bank to find out whether their money is going to come back or whether it's stuck. So it's as I would say as challenging as that. And so what we thought of is how could we reimagine the whole process such that as a North Star, could we have all the entire journey be placed inside the app itself, right? So I think that was the approach that we took, but there's a lot of material that we put out. Happy to pick up any of those threads when required.
Thanks, Deepti. And yes, I will share the link to Deepti's research at Dwara. But moving on from Deepti to you, Nanjira, where you've done a lot of work in the Kenyan context as well as the African context more broadly, and more recently with us, which is on some of the trust issues when it comes to usage of digital IDs or uptake and accessing digital IDs in Kenya. I just want to ask you about some of the challenges that you see, particularly from an end user perspective. And this is important as, the African Union has signed the Global Digital Compact. There is a massive push to adopt DPI as we see it in either the Indian or Indian or Brazilian context as is. So, what are the safeguards that we need to keep in place, and how do we make sure that some of this is implemented meaningfully?
Thanks, Jayshree. It starts where to start, I suppose. First is that, I think with the DPI language entering this sort of lexicon and digital development agenda, we have a situation where existing systems, say digital ID systems and financial inclusion drivers, say like mobile money, being put in a question, like a sort of assessment of whether they fit the DPI script, does that mean? And in the case of Kenya with IDs, where we've seen a lot of movement with a quest to, take a national ID that had about 97% coverage and make it a digital ID. And one big question in some of the research that we've just done recently and published with CFI is the question of what additional problem was digital ID going to solve? Part of the challenge there is that how the government has gone about introducing the digitalization process has introduced inadvertent trust issues and adverse citizen experiences. So typically what will happen is if a government then decides, to introduce harsh measures, like there'll be deadlines to adopt a system, or it's not properly explained and people then have to rush and queue, for example, and all these other, fiat kind of instructions to get these systems in play, you end up with a situation that does, create that mistrust issue. Then if the platform ends up being unreliable, for example, we've had a situation where with the switch to our ID system, digital ID system, for example, is not recognizable in the existing database and many other issues like that. You end up with a situation where people are left in an ether. And in much of Kenya's digital systems right now that are not necessarily DPI, but serve those functions, a quest to digitalize them further has made them less reliable and has left a lot of people locked out, actually. So one big question has emerged, and especially as this agenda is gaining momentum and being sort of posited as a crucial factor for Africa. There was an op-ed recently by some influential policymakers about how DPI is crucial for Africa. There are some fundamental questions that come up. What are you trying to solve? That's going to vary for every context. So we have to have a very clear mapping that will be led best by the experts in every ecosystem. We tend to have this in the development space more broadly, this one-size-fits-all illusion that if it's worked in India, it'll necessarily work in Africa because the global south together. But even M-Pesa, for example, in Kenya took off, but did not take off next door because some factors needed to be accounted for. So there's a need right now to really bring back the idea of understanding what you're trying to solve for. And even when I bring it to the financial space, for example, if you say you want to introduce yet another system to connect people, you might find, and especially if it's those who've already been left behind, in Africa, there's a particularly stark challenge of those being left behind have already been sitting on the intersection of so many inequalities. It's not the app, it's not the phone, it's not that particular angle of inclusion that's necessarily going to lift the tide that you're expecting. There's a lot more aspects that need to be mapped. And so sometimes this starts to get lost in translation, and different interests competing for how these systems are designed then end up, tagging the systems into a place where we don't achieve what we speak about in topics like safeguards and principles. Because the truth is, for all the technical aspects that we pursue, whether it's cost reduction or otherwise, there are policy and political intrinsic motivations that are baked in, and often we overlook this. So this is very, very important, especially now that we're trying to pivot to this idea of what DPI could be, to best explain per country context based on a mapping of where a country is, with whether it's the stack, whether it's ID, financial systems, data exchange, and so on, and then map out what that particular diagnosis or starting point for making systems more DPI aligned would look like, both in the policy side, and which means a proper political economy assessment, and also the technical capabilities. Lastly, I will say this for Africa still goes back to some fundamentals that cannot be overlooked. Connectivity, and by this I mean both of the internet and even energy to power the systems that we talk about. This conversation of DPI really needs to take that whole ecosystem approach. Otherwise we risk, having governments budget for, technical solutions, but have not mapped how they actually will be rolled out, which just sends us back to square one. So unfortunately for a lot of folks, this tends to become like, oh, we're still in the basics conversation. But I think DPI offers us an opportunity to look at policy and how technology policy is made in real consideration of social, cultural, and political realities.
Yeah, and you've actually set me up really well to go on to Sonia, because I wanted part of making sure that everybody has access to the systems that that DPI enables is making sure that we can make it more gender intentional and make it more usable for women. And Sonia, I want to turn to you because of all the work that Women's World Banking has done to reduce the gender gap. So what does gender intentionality mean in this context? And if we were to keep in mind what Nanjira just said, which is, we have to take into account the local context, are there unintended consequences that women might face, which we're not really factoring in as we change different policies around DPI?
Yeah, thanks, Jayshree, and thanks to CFI for hosting this fantastic global event. It is a bit of a full circle moment for me, having been around the table discussing the very first one 10 years ago, and so congratulations to you all. It's so wonderful to be talking about digital public infrastructure, because it's not something we were talking about 10 years ago. I feel like there are some topics we discuss in the financial inclusion space where we're having the same conversations over and over again. But this one, I just want to take a second to celebrate how far we've come on digital public infrastructure just in the last few years, that it's been kind of in our collective lexicon. And so I think that's something really worth celebrating. And the fact that we can even have a conversation specifically about elevating unheard voices, and that you invited me to talk about gender and gender aspects is also like really phenomenal. That we have the privilege of being far enough along that there's space for these conversations. Not to say they shouldn't happen up front. They definitely should, but they don't often. So speaking in aphorisms, we've been building the plane while flying it as a global community. We've hoped that a rising tide lifts all boats in this space, and that DPI will create this mass financial inclusion and connectivity and active use. But fundamentally, Women's World Banking is asking the question, does digital public infrastructure work for women? And that's really it's very simple, and it's a value add we bring to conversations that we're having with the G20, one-on-one with policymakers and regulators in bilaterals, with other support institutions that are actually like working on the fundamentals of DPI. Like I said, I think we're far enough along to have the benefit of hindsight and learn something from the things that we've seen. And I've seen a number of unintended consequences of the design of digital public infrastructure. David, you talked so nicely about the risk of abuse and the risk of no use. And we're taking a gender lens to that as Women's World Banking. I want to give a couple stories, a couple examples. One is, like, India has this just fantastic digital public infrastructure that's been in place for years now. And it was created so remarkably quickly. And I think, sometimes when we're building the plane while flying it, we make decisions that look like the right decision in the moment, but, might be problematic. One of those things was in the last few years, where there's been massive account opening in India to try to get an account in every household, which is just a fantastic goal. One of the requirements of opening an account is having a phone number associated with the account, which is pretty easy in India if your biometric is connected with your Aadhaar ID, is connected with your SIM card, and then it just makes sense to connect that to your bank account or any other financial services you may have. But we've seen women opening accounts with an agent or a business correspondent where it's like massive numbers of women opening accounts. They get to the part in the application that says, what's your phone number? And women either don't recall their phone number, or maybe they don't have a phone, or they use somebody else's phone in their family and they don't know the number. And so it's like en masse BCs or agents write in their own phone number in that place in the form. And we were working with a financial institution a few years ago that was trying to comply with the regulation that bank accounts need to be associated with the phone number of a person that's listed on the account. And this institution found that there were massive accounts, massive numbers of accounts in their institution that had BC agents as the listed phone number on the account. And so the solution they were discussing internally, and this is an institution that cared deeply about women's financial inclusion, the solution they were discussing internally was, well, if we have to comply, why don't we make these accounts household accounts and invite another member of the household to join the account, and it'll be a joint account, and then we'll be able to comply because one of the phone numbers will be associated with the account holder. Well, this is so problematic for women because a lot of women around the world choose their own financial services because of the benefit of privacy. They can keep their money information to themselves. And so opening up accounts to another household member, assumingly their husband or another man in the house, will really reduce that agency. That's one thing we saw a few years ago. I mean, just recently as well, the UPI, Unified Payments Interface, as Jayshree and Deepti talked about, launched this delegated payments feature where you can delegate somebody else to make payments on your behalf. And as a person with aging parents, really understand the use of this feature. And I think it's a smart feature for some people. But for women, it might really leave them open to some kind of financial coercion or financial abuse. It really might decrease their agency as well. And we've been celebrating at Women's World Banking, like all of the, especially the social protection funds that have flown in, that have flowed into women's accounts, and that being really empowering and kind of gender transformative in a household. If a woman's controlling the money, it means certain things for her agency in her household. And so if there is a delegated payments feature, and it's really easy to delegate somebody else to use the account, it might decrease women's agency. So that's this unintended consequences piece we think about when we think about gender equality. I want to cover just a couple more things that I've heard echoed in the panel. Maybe we can pick them up as we continue forward. One is digital financial capability. Deepti's research brings it up as something that might lead to challenges with grievance redressal and solving problems. And so do women know how to use digital public infrastructure in the first place? This is linked with trust, but it also includes knowledge and skills and attitudes. Like if they don't know how to use it, what's the pathway to get them to use it? And I think we talk about women-centered design at Women's World Banking, and this challenge of designing for the people that are least likely to use something. And oftentimes if you design for women, if you solve the digital financial capability piece for women, you're solving it for a lot of disadvantaged groups that might not have an easy ability to intuitively know things like the 3 little lines in the top corner of an app mean menu. Like I was explaining that to somebody the other day in my family that was like, oh, I said, click the menu. And they had no idea that the 3 little lines is the menu. And so how can we help people learn by doing? How can we help them with the first transaction that will make it more likely that they'll make other transactions? I also wanted to pick up on something that Nanjira said, which was reliability. And this is a part of user centricity. Like if the experience of a user is to go to their agent and say, I'd like to make a payment, and the agent says, oh, I'm so sorry, the interface is down. What we end up seeing is an informal solve to this, where if it's a community where everybody knows each other and there is social capital and implicit trust in the community, the agent might say, sorry, the system's down, but just leave your money here, give me your phone number, and I'll put your money into your account once the system comes up. And that works where there's implicit social trust. It's not a perfect solution, but it makes sense in some communities. But there are a lot of other communities where there isn't that implicit social trust, or a BC agent might defect on the social trust. And that's where we see a lot of challenges with that solve. Women's World Banking worked with an institution in South Africa called PayCode. They were actually the winner of our FinTech Challenge last year. And PayCode works offline through Bluetooth when there's not online capability. So you could send money to somebody near you through Bluetooth. That payment will be cleared and settled once the system or the internet comes back online, and it kind of solves that network downtime issue without having to rely on social trust in the system. One thing I also hope we can pick up on in the rest of our conversation is cost. Nanjira brought up the issue of budgets, and Jayshree, you mentioned that in your intro, and that's something that it seems like there's a disequilibrium, and I'm not sure how we're going to solve it as a community. Like, so much of digital public infrastructure is currently dependent on funding, and I think that probably makes sense for the setup of digital public infrastructure, and it's good that there's a lot of investment in DPI at the moment. But things like ongoing user testing, catching and solving unintended consequences, fixing poor grievance redressal, things like that, those are going to be ongoing costs. And I can't imagine that the multilateral development institutions are going to want to step up and solve these little bits along the way. And so that's a question I can pose to the panel. Like, what's the solve for this that is a sustainable private sector solve? Jayshree, I know you probably have an agenda too, so feel free to work that into the questions that you're going to incorporate from here.
I mean, so much to unpack in what you just said, Sonia. And, that was one of my questions, but I'm glad you raised it, which is on cost, because, at the heart of being user-centric, I mean, it's one thing to say, let's be user-centric, but at the heart of it is making sure that we iterate, that we solve for some of these unintended consequences, that we constantly make sure that the most vulnerable are taken care of. And really, there is a big question of, where does the budget for that come from? And are states really equipped? Because besides the UK, which has an innovation unit, and now we know that PIX has PIX Forum, where they've done the iteration, there are very few other countries that have invested in this kind of ongoing innovation, user centricity, inherent, improvement of design. I do want to leave that open for the panelists to weigh in on, because I think it's a really important question and the elephant in the room. But you also raised three really important drivers of trust, Sonia, which is a digital financial capability. You mentioned reliability and agency. And with that, I want to come back to, I think, what somebody had raised in the audience chat to Deepthi, which is, you mentioned when you were speaking about the research that you've done in India that people don't stop using UPI altogether, which means that they still do retain some amount of trust. Part of it, like you attributed, could be because of network effects and the fact that everybody else is using it, so I will use it. But what else do you think is potentially driving that? And can you revisit that dropout piece a little bit? Who's really dropping out if they are?
Yeah, no, so I think we don't have data to analyze what's the level of, when I say drop-offs, there are two drop-offs. One is drop-offs through the GRM process, but the other is drop-off from UPI altogether, right? I think a lot of the issues are in relation to server failure when it comes to transactions. And server failure is a very complex issue because there are at least 4 to 5 entities in one transaction, depending on whether you're transacting with another person with the same bank, holding a bank account from the same bank or not. And so there are many reasons why server failure happens, how long it's going to last, etc., etc. Right? So the NPCI does track the downtime incidents, which are really, I think, more than 300,000 transaction failures over a period that is longer than 30 minutes or so. But I'm sure they have cuts which are shorter than 30 minutes, right? So we don't know what the data looks like. If it fails, you just try again. But there are times when you try 3-4 times and then maybe money gets stuck. When money doesn't get stuck, it's actually very clear because you know money is going to come back. It hasn't left your account to begin with. So I just wanted to say that that there is a unified dispute and issue resolution mechanism that has been mandated by the NPCI, which any payment service provider that is onboarding, app providers, which is then onboarding consumers, have to have already been clued into and linked into and have the codes in place so that you have complete and real-time access to it. So every user can in fact ping the system to find out where the transaction is stuck and what's the status. But that ping happens, I think, up to 3 times a day. So if you've already pinged maybe 2 hours back, you ping it again, it's going to give you the same answer, right? So the idea is, yes, this is great. So people have a sense of when money is going to come back. For most parts, money in fact does come back, right, within a few hours. There is a very tiny fraction, I wouldn't say tiny, but it is substantial, because when you look at the numbers, then it becomes large, right? Where it takes more than 3 days, and then there are times where it takes more than a month. Now, what happens there, right? We have to consider, yes, if they are small ticket transactions, how does it matter? But we should understand that when it comes to lower income consumers who then it's when money gets stuck, it significantly disrupts their ability to manage their daily money management demands, right? So and so they don't have those kinds of savings buffers that they can rely on. Say, oh, I know money's going to come back, but I still need to make this transaction on an emergency basis. So that buffer is not there, and therefore I think here it becomes very important to go the extra mile and think about, okay, how am I going to service the consumer from a comprehensibility manner? Because yes, the NPCI mechanism sort of prioritizes speed, right? Speed of resolution, money coming back to you. But if it's beyond 3 days, or just telling me that, yes, it's going to take 3 days, because see, look, 99% of all transactions, in fact, were settled in 3 days, so you don't need to worry, is a good signal, right? To the user to say, actually, you have nothing to worry about. And then there are various ideas that we kind of put in, right? Like the whole self-resolution, right? Can I identify my own transaction and choose the issue by myself, rather than having to wade through a lot of, say, content, video content, links that lead me outside, content in language which I'm not familiar with, etc., etc. If I can avoid all of that and say, okay, let's just create a very narrow process, which is, if we can think about standardizing it across UPI apps, then that would be the most ideal, because the user who has learned one process and doesn't have to worry about relearning and unlearning something from another app and then like figuring it out in the new app, because the reality of the matter is, today, because of the server failure issue, people in fact have 2 or more UPI apps on their phone at any given point, and then they switch between, right? Because I did a transaction to go through, I'm just going to try it through another app. So that's also there. Of course, we can think of a reality where people in fact have only one app. That's a journey to be covered, right? Because you do want a situation where server failures are not such big a deal that people in fact stop using all of the other apps and just keep a single app. But that's a while away.
Could I ask a follow-up question to that, Deepti? So, you're talking about apps. What about people who don't have apps? Like, we know women are less likely than men to have a smartphone in India. What about people who have just the feature phone, or people who have a SIM card that they're putting in somebody else's phone? I wonder about the user experience of those populations.
Oh, so in those cases, you can't use UPI because you need to have a mobile number that has already been linked to the bank account, the example that you described. If that linkage isn't there, then authentication of you as the user holding this bank account and owning this phone, in fact, is not established. So it's not easy to, carry around a SIM card and just pop it into any phone and then like start operating UPI accounts. I think that mapping is done fairly well. Of course, I'm not going into the whole issue of SIM card duplication and the fraud, and like I'm not going to that. I'm just if you look at that, yes. Feature phones, yes. So I think NPCI has introduced UPI for feature phones, but I think our study hasn't actually looked into how seamless is that experience. And I think that's one place where I think future more research would actually be helpful, right? Whether women are actually using UPI on their feature phones and through IVR mechanisms. There are many ways. I think there's a UPI 123 pay. There's IVR. I won't go into the details, but there are many ways through which a UPI can be used. And I mean, it'll be interesting to see how much of adoption is happening because of these features which have been thought of for constrained users.
Yeah, thanks.
And both of you raise a really important point, which is, and this is really to all the panelists here, which, to go back to this whole issue of where do we get the funds for this iterative research, ongoing testing and improvement, and what is the kind of data that should be published more and be available more transparently so that we actually know what's working and what's not working. What are some lessons that you've seen from different countries that you might want to share here?
David, I wonder if we can go back to the example of Brazil, as it seems like that's a place where I certainly want to learn more about it. It seems like it's working quite well.
Yes, there's a lot to be said for, and when you say Brazil, Sonia, you're obviously talking, I imagine, more specifically around PIX as an example. There are other aspects, and Brazil has seen this remarkable convergence that's relatively recent across other aspects of the capabilities as well. But certainly, just for a moment, talking about PIX, what's interesting about that is a decision by a central bank to step in to be the funder and the creator of the digital public infrastructure, which is an alternative to the traditional funding that we see in the financial sector, which is the club goods model. NPCI in India is an example of the club goods model. Kenya, South Africa, many countries have seen that, where banks and other providers come together to fund the capital costs and stand good for any shortfalls. So Brazil took a different approach there. And I think the question that Brazil raises is they've done a very good job with a kind of lean approach that's publicly funded. The question that came up in some discussions with them earlier this year is, how lean can you get? So I'll just give you an example if we're talking user centricity. They started with the Central Bank of Brazil team started doing a wonderful job of surveying consumers and looking at use cases and trying to understand them very clearly. And they set themselves a goal of saying every 2 years, we want to repeat that. So as an infrastructure, we aren't going to just rely on what the participants, the banks and the others tell us about end users. We're going to go and ask them ourselves. But they found that for budgetary reasons, it wasn't possible to do that in 2 years. It was delayed. They've only recently completed that, I understand, and we look forward to hearing that. So there's an example of where being very lean on budget meant a trade-off. And the trade-off was that certain types of customer research were deprioritized. Not that they weren't wanted, just they weren't afforded. So I would say that in the midst of those constraints, Brazil has done a great job. One of the things they have done is set up a forum, the PIX Forum, that includes a diversity of voices, including more recently a civil society organization, IDEC, which actually looks at consumer interests and voices and tries to bring them to bear. So there are things like that you can do, but I think we can't get away from the fact that even while we want to see a lean approach, I would argue that cutting too far into some of the customer-centric aspects of DPI is a cut beyond a threshold which is viable for the long-run sustainability. And I think there's a very worthwhile discussion to be had about just what sits in that minimum viable set of features, how much customer research is necessary, but not too much. The user redressal, the grievance redressal for users that we've heard Deepti talk about in India, which NPCI has done a great job of resolving, and Brazil is groping towards that. just how much is the minimum viable level as opposed to being thought nice to have. And those to me would define the kind of the basic package of financing, whether it can be club good financed or, for me, club good plus financed. In other words, some way of keeping the club from being too inward focused and too fixated on its own issues, but with some external participant providing finance and therefore influence over what it does.
Yeah, and David, I want to plug your upcoming paper where you actually draw lessons from participant centricity in Brazil and India, which should be released on the CFI website in November. But also extending this, to broader participation, because there is obviously a lot that we can learn from from the private sector and the role that they have played in ongoing testing and reducing risks, which we haven't spoken about very much in this panel so far. But fraud detection, other on emerging risks, there is a lot that's happened in that space which we can learn from. And is there a role for public-private partnerships in this case? Because the problem is just so massive.
Yeah, maybe public-private partnerships plus. I would guess that this is something that the standard setting bodies are really thinking about, fraud detection policies as we move towards a world that has better digital public infrastructure. What will that mean in terms of complying with know your customer rules, money laundering and terrorist financing? What are going to be the new financial crimes that emerge? That on its face we might be able to say, oh, it's digital, so we just know everything that's happening. They think it's just going to kind of create new creative ways of creating challenges. So I think with that incentive structure and the risk of the security and soundness of the financial system at play here, I think we have no option but public, private, and international partnerships to solve these challenges.
Any other points before? I just have one last question for everybody to weigh in on. But I do want to hear if Ranjira or Deepthi, you have anything else to add on?
Yeah, I was just reflecting on what we usually tend to mean by PPPs would perhaps need to be mapped out, because in part it also is about how at the end of the day our citizen voices, especially as beneficiaries, incorporated into these models, and even the insights, especially from those who work at the community level, that don't tend to feature in how we frame PPPs and how we make it. I suppose we're barreling towards multi-stakeholder and what it looks like in this format. But I think there's going to be a really interesting journey around what PPPs mean, and especially for developing countries that do not have necessarily the state resources that may need to take all this off, but how you also mitigate this idea that gains are privatized but losses or risks are socialized, which tends to be a big flaw in the PPP model, and something that we are seeing in a number of countries play out in how those models are financing infrastructure, both digital and analog. So I think it's we just need to be very mindful about when we talk about PPPs, what we actually mean by that and what is embedded, and not assuming it's, again, one size fits all.
I love that. Gains are privatized and risks are socialized. That's scary.
Ranjira, there is a question for you in the audience chat where I think a little bit more for you to weigh in on the kind of politically convened capacity analysis that you think should be done prior to launching or exporting DPI to a new market. And I think this is more in the context of the work that you spoke about earlier, which is, how things are being replicated as is in markets.
Sorry, I missed that. Was that for me, Jayashree?
Yes.
Oh, okay. Yeah, I mean, we mapped out a framework that sounds simple, but I think is a good starting point, where we have to look at two things at the same time: what state capacity is, in every country and every context, and the effective accountability environment that exists there. And we can map that in a quadrant when assessing what we're introducing into a country. All too often with the technology, we start with a techno-solutionist approach. This X is going to fix for issue Y and Z, and then the unintended consequences that could have been mapped at understanding the political and policy environment are considered afterthoughts. And I'll give an example here where we have a number of countries where the intrinsic motivation for a state to introduce technology is less to serve the people and more maybe to surveil and have control. So in that case, we have to ask ourselves, whether it's DPI, whether it's private sector driven solutions, there's that inherent risk there. How do we mitigate for that? What can we do before the technology is rolled out and leads to harms that we don't then end up talking as afterthoughts? So this then is the kind of analysis that we need to also be very morally and intellectually honest about. We tend a bit to lean too much on, this is going to be net good, but the world is messy. And politics are real, and the technological is political. So starting with that assessment of an environment, and best done by local actors, to be honest, is very, very important for where, especially we're saying, public-driven or international development-driven investments in technology should go in. And once we map that, then, we start to figure out what are the best ways to start, mapping advocacy initiatives that can help maybe mitigate these harms before giving a system to a government that then leads to these harms. That's an extreme end. On the other end, you have examples of what David was telling us with PICS, for example, but not every country will necessarily have that motivation that Brazil has had to let PICS work to be the success that it is. And I think what we're unfortunately starting to learn from a lot of African countries is that we cannot overlook the political aspect of how technology is politicized and is introduced into real politics of a space and a place. And we cannot keep risking talking about people being harmed as unintended consequences in this quest for digital development.
Yeah, absolutely. We definitely shouldn't, people shouldn't be unintended consequences. That is definitely a quote we should carry and a message that we should carry. We are getting to the end of the session, and of course we could go on and on, but I do want to turn to all of you to see if you have any quick calls to action, because this is obviously, thinking about the most vulnerable and making sure that DPI works for them is core to a lot of the work that we do in this sector. So what should we do? What are 2 or 3 things that you can leave for the audience as well as us at the end of this panel?
I'm happy to start with one, Jayshree. So building on the earlier discussion about cost and this question of what is too lean for DPI. We want it to be lean, but not too lean. I want to use a metaphor I heard recently in a podcast talking about AI, where the whole discussion was about vast expenditure on developing AI and very little expenditure on the safeguards for AI. And the metaphor that was used is saying from biology, in our bodies, something like 15 to 20% of our energy gets used by the body's immune system at any time. And so here's the thought experiment that I turn into the challenge, which is, what if we said 15 to 20% of any DPI budget should be looking at the user centricity, not simply the costs of adoption and everything else? What if we use some norm, and I don't know that that's the right number, but let's use it as a starting number to ensure that customer research is done, to ensure that user redressal is built in appropriately, and to ensure that there is the ability to publish data and to learn from it along the journey, because no DPI is born instantly mature and large scale. There's always a journey. So that would be my suggestion.
I love that. And you heard it first on Financial Inclusion Week, which is 15 to 20% for consumer research. I'll never say no to that. Other calls to action.
It's always hard to follow Professor Porteous, but I'll try. So just like I posted in the chat a policy brief that Women's World Banking put together that just asks some very simple questions, and I'll ask them as the call to action. And so if there are any governments or key stakeholders listening to this live or later that are trying to understand how to build a gender responsive digital public infrastructure, there should be some key questions you're asking. One is, in your digital identity system, are women just as likely as men to have a digital identity? And we know globally, actually, women are less likely than men to have a digital identity. Second, are women just as likely to have access to and use the integrated payment system? We talked a lot about that today. And if they're not, it's a real red flag. Third is, does the country have a national women's financial inclusion strategy or women-focused targets in their national financial inclusion strategy? And do digital public infrastructure goals and design kind of map onto that? And then fourth, have you thought about the digital financial capability of women in your country? Almost every country in the world has a Ministry of Education. We're talking with them about digital financial capability, not just for students, but also for adults, and thinking about how to increase the knowledge, skills, and improve the attitudes of your population to use digital public infrastructure.
Those are great. Thank you, Sonia. Ranjira, Deepti?
Yeah, I think I would maybe take David's idea a little further and say, one is of course thinking of the budget, but I might even say why not aim for outcomes, right? So which is that when we have a DPI having and I'm really, because my learning is really from the UPI space, but when we have a DPI with a digital interface that consumers have to use, why not say that at a minimum the interfaces need to be designed for, say, medium level fidelity, right? Like so that medium proficiency users can you have to demonstrate, the app designer, the app provider needs to demonstrate that it's actually working for a medium proficiency users. So kind of if you set that goal out there, then reasonably you have to demonstrate that you have put in the effort to figure out whether it's actually working or not, and proof of that has to be kind of furnished. And the second is really specifically in relation to GRMs, and I would say the grievance redress mechanisms, they help support irrespective of what DPI it is, right? But just if there are multiple private sector providers offering access to the DPI and offering services, then and there is variation across, then and really competition needs to play out. Perhaps there's value to thinking about bringing in user-centric, consistency in the GRM navigation interfaces. But I mean, that's a very broad recommendation. It needs to be figured out whether it actually works for whatever is the specific DPI for which this recommendation is being considered. But maybe there is value to doing that, because that just significantly reduces the burden on users to understand the navigation architecture if they are switching between the tech interfaces. Yeah.
Thank you, Deepti. Ranjira?
Real quick, I mean, I go back to inclusion, which seems to be the umbrella under which all this plays out, just to be very mindful for ourselves. What are we including people into? Good systems in bad hands will not necessarily lead to good outcomes. We need to be very alive to that. And stories upon stories are starting to emerge about real harms, and we must be alive to that. And so having that moral and intellectual honesty about this rush to hurry up and wait, that the techno-solutionist approach is actually leading to harms, will also be very helpful, because sometimes you also just need to stop and pause and think and marinate in the discomfort of some things that we do, however well intended.
Thank you. Well, this is such a great discussion. I'd like to thank you all for your time and insights today. To people that are listening in and probably will listen into the recorded session, the work on DPI is just about beginning, so I'd urge you to follow it closely. User centricity, I think, is only one of these dimensions of making sure that DPI is more meaningful. So if you'd like to work with us on this topic, reach out to us. We'd love to partner. And on that note, I'd like to thank everybody. Enjoy the rest of Financial Inclusion Week. Please don't forget to provide feedback on this session as well as the week at large, and have fun. See you all. Thank you.